Welcome to Module 1 of our Regulation CC training. Today, we're diving into the foundation of how funds move and when they must be made available under federal law. This module will walk you through the Expedited Funds Availability Act, the purpose and scope of Regulation CC, important definitions, and who must follow the regulation. First, let's go back to the reason Regulation CC even exists. The Expedited Funds Availability Act, or EFAA, passed by Congress in 1987. The EFAA was created to protect consumers by ensuring their deposited funds would be available within a reasonable time frame. Why was this necessary? Before the EFAA, banks would hold checks for extended periods without clear disclosure, leaving customers in the dark and delaying access to their own money. Why EFAA matters. The EFAA required the Federal Reserve Board to issue rules. That's where Regulation CC comes in and set maximum hold periods for deposited funds. It also mandated clear communication about when funds would be available and required standardized rules for check clearing and returns. In short, EFAA gives customers confidence that their deposits won't be held indefinitely and that the banks play fair when it comes to money access. Purpose and scope of Regulation CC. Regulation CC was developed to implement the EFAA. It serves four main purposes. The first is funds availability, setting timelines for when deposited funds must be made accessible to the account holder. The second is disclosures, ensuring institutions provide clear and accurate information about their funds availability policies. The third is check collection and return, standardizing how banks process and return check access across institutions. The fourth is expedited recredit, establishes a procedure for consumers to dispute and resolve issues involving substitute checks, a key part of Check 21 Act. Regulation CC sections. Each of these sections plays a critical role in how financial institutions operate and how we protect our members and customer rights. Now, let's go over some essential terms you'll need to understand Regulation CC. Definitions. Transaction account, a deposit account that allows the account holder to make withdrawals, deposits, or payments on demand, like a checking account. Business day, a calendar day when the bank is open for substantially all business functions. Saturdays and Sundays and federal holidays usually don't count. Banking day, a business day during which a bank is actually processing transactions. Substitute check, that's a paper reproduction of the front and back of an original check that is legally the same as the original for all purposes. Then you have availability schedule. That is a breakdown of when various types of deposits must be made available to the customer. Understanding these terms will help you interpret hold times, disclosures, and customer rights. Now it's time for a pop quiz. True or false? A business day and banking day are always the same thing. The answer is false. A business day is when the branch is open for business, but a banking day is when check processing operations are active. Knowing the difference matters. Who is covered by Regulation CC? Now, let's talk about who must follow Regulation CC. Regulation CC applies to all depository financial institutions in the United States. This includes national and state chartered banks, credit unions, savings associations, branches of foreign banks operating in the U.S. Regulation CC is enforced by the institution's primary regulator. For example, for credit unions, enforcement falls under the NCUA. For national banks, it's the Office of the Comptroller of the Currency, or OCC. For state banks, it's the FDIC or the Federal Reserve might step in. The Consumer Financial Protection Bureau, or CFPB, also has authority to supervise and take action against unfair and deceptive practices. Let's recap Module 1. The EFAA was passed to ensure fair access to deposited funds. Regulation CC implements this act by setting rules around funds availability, disclosures, check collection, and recredit. Understanding terms like transaction account and substitute check is critical to applying this law correctly. All depository institutions must comply, and enforcement depends on the institution type. In the next module, we'll dig into how hold types, including standard, exception, and case-by-case holds, and when they're allowed. Thanks for watching Module 1 of Regulation CC Training with Jay Get It. Stay tuned and stay compliant. Disclaimer: this training is for educational purposes only and is not legal or regulatory advice. Always consult your institution's compliance officer or legal counsel regarding the regulatory obligations. Welcome to Module 2 of our Regulation CC training. In this module, we'll break down the key terms and definitions that serve as a foundation for understanding funds availability. Whether you're on the front lines opening accounts or handling deposits, these terms shape how we communicate and comply with federal regulations. Let's dive in. A check is a written, dated, and signed instrument that directs a bank to pay a specific sum of money to the bearer. Under Regulation CC, this includes personal checks, business checks, official checks, treasury checks, certified checks, and money orders when drawn on a bank. Keep in mind, while checks are becoming less common with electronic transfers, they're still a critical part of Regulation CC's focus. Understanding timing is essential under Regulation CC. Let's define two key terms. A business day is any calendar day other than Saturday, Sunday, or federal holidays. A banking day is a business day on which a bank is open for substantially all of its banking activities like accepting deposits and cashing checks. For example, if your branch is open Monday through Friday but closed on federal holidays, then those 5 days count as both business and banking days. Funds availability deadlines are based on these definitions, so the effect when deposited funds must be made. Historically, Regulation CC distinguished between local and non-local checks based on where the check was drawn and where it was deposited. This mattered because checks drawn on out-of-area banks could take longer to clear. But here's the key update. This distinction is no longer relevant post-Check 21. Since Check 21 allows for electronic clearing of checks, nearly all checks are now processed the same way, regardless of geography. We cover this to give context, but you no longer need to differentiate between local and non-local checks when applying holds. Now, let's discuss the availability schedule, essentially the rulebook for when deposited funds must be made available. Here's a simplified version of what Regulation CC requires. Next day availability. That's cash deposits, electronic direct deposits, U.S. Treasury checks, honest checks, meaning drawn on the same institution, certain government, cashiers, or certified checks when deposited in person. Second business day availability. Most other checks like standard personal or business checks. Extended holds. Under certain exceptions, funds may be held beyond 2 business days. We'll cover those shortly. Understanding this schedule helps prevent confusion and ensures accurate communication with members or customers. When it comes to holds, new accounts are treated differently. A new account is defined under Regulation CC as one that has been open for 30 calendar days or less, but it's more than just the account. Regulation CC defines this based on the customer or membership relationship. If a person has never had a transaction account at your institution in the last 30 days, then it's considered a new account, even if they had a loan or other product. Why does this matter? Because for new accounts, the usual availability rules don't apply. Financial institutions have greater discretion to place longer holds on deposits made into new accounts, especially checks. This is a key area where frontline staff must understand how to apply holds properly. Let's now define 2 critical banking rules in any check transaction. The depository bank is a bank that receives the check deposit from the customer or member. The paying bank is the bank that the check is drawn on, the one that will ultimately pay out the funds. For example, if a member deposits a Bank of America check at your credit union, your institution is the depository bank, and the Bank of America is the paying bank. Regulation CC primarily applies to the depository bank. That's because the depository bank controls how and when the funds are released to the customer. These 3 hold types are essential tools under Regulation CC. We have next day availability. This rule requires institutions to make certain deposits available by the next business day. It applies to cash, electronic deposits, U.S. Treasury checks, honest checks, certain certified cashiers or government checks deposited in person. As of July 1st, 2025, the first $275 of any check deposit that qualifies must be made available by the next business day. Safeguard exceptions, also called exception holds, these are situations where a financial institution can legally delay availability beyond standard schedules due to risk factors. These include large deposits, when the total deposit of the checks exceeds $6,725 in one business day. The first $275 must still be available next business day, but the rest may be held. Redeposited checks, when a previously returned check is resubmitted. Repeated overdrafts, if the account has been overdrawn repeatedly in the past 6 months. Reasonable cause to doubt collectability, if a check appears altered, suspicious, or fraudulent. Emergency conditions, this includes natural disasters, communication outages, or system failures. When using a safeguard exception, you must provide a written hold notice to the member, clearly state the reason for the hold, disclose the date when the funds will be available. Case-by-case holds. These are discretionary holds placed by the institution even when an exception doesn't apply. Institutions can delay availability up to 2 additional business days beyond the standard hold period, but you must disclose your case-by-case hold policy to the account disclosures, notify the customer at the time of deposit, provide a written hold notice that includes the amount held when the funds will be available. Tellers must follow strict guidelines for issuing these notices. Incorrect or missing hold notices can result in regulatory violations. Let's review the key takeaways. A check is any negotiable instrument drawn on a bank. Businesses and banking days determine funds availability timelines. The local versus non-local check distinction no longer applies to post-check 21. The availability schedule dictates when deposited funds must be released. A new account is one open for 30 days or less, allowing more flexible hold rules. Know the difference between a depository bank and a paying bank. Understand when to apply next day availability safeguard exceptions or case-by-case holds and when written notices are required. As of July 1st, 2025, the next day threshold is $275 and the large deposited threshold is $6,725. Disclaimer. This training is for educational purposes only and does not constitute legal or compliance advice. Always refer to your institution's policies and consult with your compliance department for guidance on Regulation CC. Thank you for watching. Welcome back to our Regulation CC training series. In this Module 3, we're diving into one of the most essential parts of Regulation CC, funds availability rules. If you're working on the front lines, handling deposits, answering questions about check holds, or helping new account holders, this module is for you. We'll explain when funds must be available, how long you can hold them, and what changes for new accounts. Let's get started. Funds availability refers to how quickly a bank or credit union must make deposited funds accessible to the account holder. Regulation CC sets federal standards that balance member convenience with fraud prevention. The key idea? Members need access to their money, but financial institutions need time to verify the deposits, especially with checks. Let's start with next day availability, a cornerstone of Regulation CC. Under Regulation CC, certain types of deposits must be made available by the next business day. This includes cash deposits made in person to a teller, electronic direct deposits like payroll, U.S. Treasury checks when deposited into the payee's account, honest checks, those drawn on the same institution where they're deposited, certified checks, cashier's checks, state or local government checks when deposited in person. But there's also a dollar-based rule. As of July 1st, 2025,
The first $275 of any non-exempt check deposit must also be made available by the next business day. This is known as the minimum next day amount. It's a key figure. Make sure you memorize it. $275. For most other checks, Regulation CC allows financial institutions to hold the funds for up to 2 business days. This is the standard availability timeline. But there are situations where you're permitted to hold funds longer. These are called exception holds, and we'll cover those more in the next module. For now, here's what you need to know. Standard checks equals funds available on the second business day. Large deposits over $6,725, exception hold may apply. Emergency conditions, overdraft history, or redeposited checks may trigger extended holds. It's not just about what was deposited, but how much, by whom, and under what conditions. When it comes to new accounts, the rules shift. Regulation CC defines a new account as one that has been open 30 calendar days or less. And here's the important part. During this 30-day window, standard funds availability rules do not apply. You can place longer holds, even up to 9 business days on the same deposit. But not everything is delayed. For new accounts, cash and electronic payments, like direct deposit, must still be available by the next business day. The first $6,725 of a treasury check, cashier's check, or certified check must be available by the first business day after deposit, if the deposit is made in person to an employee. So, next time a new member opens a checking account and drops off a big check, check the account open date before making available promises. Here's a simplified version of the funds availability timeline. Day 0, deposit is made. Day 1, next day availability for $275 of check deposits. On-us checks. Cash. Direct deposits. Treasury and government checks if deposited correctly. Day 2, remaining funds from standard checks become available. Day 3 through 9, only if exception holds apply, i.e. large deposits or new account rules. This chart is an excellent reference. Consider printing it or saving it for quick access during transactions. Let's bring this to life with a few real-world examples. Example 1, direct deposit. A member's employer sends a payroll direct deposit on Thursday. Funds must be available by Friday. No exceptions. It's electronic, so next day available is required. Example number 2, cash deposits at the teller line. A member brings in $800 in cash and deposits it into their checking account before the cutoff time. Funds must be available the next business day. Example number 3, on-us check. A member deposits a $1,000 check written from another account at your same institution. This is considered an on-us check. The first $275 must be available next day. The remaining $725 should be available no later than the second business day. Example number 4, ACH versus check. A member receives 2 payments, one by ACH transfer, one by mailed personal check. The ACH must follow next day availability rules. The check may be subject to a standard 2-day hold unless you apply a case-by-case or exception hold. This is a great example of why it's important to ask how the deposit was made. Example number 5, new account holder. A new member opens a checking account and deposits a $10,000 official check. Since the account is less than 30 days old and the check exceeds the threshold for large deposits, you may place an exception hold on a portion of the funds. You must make the first $5,525 available by the next business day and provide a written hold notice explaining when the rest will be available. Regulation CC's funds availability rules are not just policies. They directly affect your members' experience, trust, and ability to manage their money. So here's your quick recap. Next day availability applies to cash, direct deposits, honest checks, treasury checks. First, $275 of other check deposits. 2-day holds are standard for personal and business checks. New accounts have more flexible holding periods up to 9 business days for same checks. Use the timeline chart as a quick reference guide. Always check account age, deposit type, and risk level before releasing funds. If this helped you better understand Regulation CC funds availability rules, give this video a thumbs up and subscribe to the channel. Turn on notifications so you don't miss our next video on exception holds and disclosures. Disclaimer: this video is for educational purposes only and does not constitute legal or compliance advice. Always consult your institution's policy and compliance officer.